Today we're going to talk about the January effect, a recurring theme in markets pretty much every year, how you can capitalize and what you should be looking for. Hey everyone, lead trainer with StocksToTrade, Tim Bowen here. It's that time of year again. You might have heard about the January effect. So I'm going to start out with kind of detailing exactly what it is and the things you should be looking for and how you can potentially profit in January. So back to the definition. Remember, most traders lose money, especially traders that overstay in positions. The bag holders, we like to call them, the people that get stubborn, that don't have a stop loss. These are the people that we can look to profit off of. But on the flip side, at the end of the year, the calendar year, quite frequently, you get tax loss selling. So what that is many of these traders, many of these investors, maybe they did well in some areas, maybe they did poor in trading, maybe they sold a piece of real estate, but yet their stock holdings didn't do very well. So the accountant is like, listen, sell these stocks, unload these losers, and then it will offset your gains from your other income sources. So basically, it's a tax strategy. But what that creates is a lot of these long-term downtrending stocks that maybe spiked in June or spiked in September or earlier in the year that gradually downtrended into the end of the year. Everyone will cut their losses. They'll take that loss in order to offset their gains. Then, because maybe they're gluttons for punishment, or maybe because people always have that renewed, just like the diet or the exercise plans in January, people think that this year it will be different. So what you will see is people will buy back into these stocks in January at the beginning of the year. They booked that loss, they saved a little bit on their taxes, but maybe they believe in this company, they still think it can bounce someday. The beauty of StocksToTrade is we have pre-built scanners to look for these stocks that are at 52-week lows that have sold off over a long period of time. And that way you can spot these January effect stocks, because now if they've been on that 52-week low, if they've been long-term downtrending, when you see them show up on your scanners with volume and with news, these are definitely dip buys or bounce play type ideas. And normally, they can be kind of short-lived, maybe a month, maybe a few months, but these can be solid day trade and swing trade opportunities. Keep an eye out for these. There is definitely potential there. Be sure to use StocksToTrade, the pre-built scans, or remember, we have hundreds of criteria that you can build your own custom-built scanner to look for these maybe tweaked criteria if you spotted a different trend or a technical indicator that lines up with these. And you can definitely look to profit off these bounce plays in January and into the beginning of the year when everybody has the renewed enthusiasm. New year, new me. Maybe new year, my lame stock will bounce. So would like to know, have you done well in January? Have you looked to dip buy some of these tax loss sellers that sell off into late December? If you've done well with the January effect, be sure to comment below. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.